Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Tuesday morning and cues coming out of global markets are fairly mixed with Wall Street kicking off July in style. But the Gift Nifty, that is something that we monitor, is trading with smart gains. So 24,200, that will be the level to watch out for today, given the fact that yesterday we shut shop just about 30 points off the record levels of 24,174 or thereabouts. So 24,200 is one level that we will be watching out for in today's session. Lots of stocks in focus. We have a new listing as well at 10 a.m. today, Allied Blenders. We'll be talking about that as well. All your stock related queries are welcome on our live feed. Please keep them coming in. We'll try and take them up with our technical expert on the show and help you navigate the market as well. But before we move any further, let's take a look at the top headlines at this hour. Wall Street kicks off July in style as the Nasdaq climbs to record high, Dow and S&P 500 to end with gains. Investors will watch out for cues for rate cuts from Jerome Powell when he addresses the European Central Bank later today. Asian markets trade mixed despite a strong handover from Wall Street. The Gift Nifty is suggesting a muted but positive start. Of course, 24,200 is one level that will be watched out for today. Crude rally continues, Brent approaching that $87 a barrel mark now amid rising tensions between Hezbollah and Israel. Expectations of higher summer demand in the United States also push prices higher. Adani Group stocks will be in focus as SEBI issues showcause notice to Hindenberg. Government hikes windfall tax on crude to 6,000 rupees per ton. Of course, ONGC and Oil India, the likes of these stocks, will be in focus as a result. And Hero Moto's sales rise 15% in June, comfortably beating estimates, while Tata Motors, sees a dip in commercial and passenger vehicle sales in the month of June. Well, before we get on board our guests for today, let me quickly take you through the cues for trade. The Nifty, of course, holding above that 24,100 mark. In fact, just about 30 odd points shy of all-time high levels. Sensex also rose 440 points. So the rally that started, or in fact the rally that took a pause on Friday, has resumed, and we could see buying in mid and small caps as well, with both the mid cap and small cap indices hitting fresh record highs in yesterday's session. The Nifty Bank Index also gained 0.5% or thereabouts. It was IT that stood out yesterday on expectations of better than expected earnings. There's a report from Motilal Oswal on the IT pack. We'll be discussing that later on in the show. If you talk about the Nifty put call ratio, that rose to 1.2 levels vis-a-vis 1.17 in the previous session. And if you look at the stocks in F&O ban, no new additions and no deletions as well. We have India Cements and Indus Stars. These two continue to be in the F&O ban. In terms of flows, the DIIs, domestic institutional investors, bought stocks worth almost 4,000 crore rupees in the cash markets. FIIs continue to sell. On Friday, they sold shares worth a meager amount. Yesterday as well, they sold shares worth 420 crore rupees or thereabouts in the cash markets. Let me bring on board our technical expert on the show. On that note, Osho Krishan, who is the senior analyst, technical and derivative research at Angel One, joining in. Osho, great to have you on the show. We've resumed the rally that took a pause on Friday, right? And do you think we have the legs to hit that 24,200 mark today itself? Because we're just about 30 points shy of all-time high levels.
Very good morning, Nandita. Firstly, thank you for having me at your show. Coming to the technical point of view for Nifty, then in the pre-market opening, we are witnessing approximately 24,230 odd levels for Nifty to get open. So I'm expecting that this rally could continue because 250 odd points was some of the technical resilience that can be seen for Nifty. But looking at the overall momentum in the market, even though the markets are overly stretched in the overbought territory, but there is no stopping by. There has been a strong gravity defined move that can be seen in Nifty. So I'm expecting that there can be a decent up move, but I'm not very much aggressive in the key indices because, as you have already mentioned, the major of the derivative parameters or technical parameters are very strongly overbought position. So I'm expecting that instead of having focus on key indices, one should definitely try to focus on the thematic movers. For example, IT, auto, these sectors are able to perform very well in the last two trading sessions. and I'm expecting that this should continue. There is sectoral rotation that is happening in the market, and one should focus on those themes only where one can definitely try to outperform the market.
Right, and what about the Nifty Bank Index? It has receded from all-time high levels, but yesterday we saw a good 0.5% kind of moves. Do you see some bit of more up move from here, or are the charts suggesting some bit of a cool off at these levels?
See, overall 52,300 is a very crucial support zone for Bank Nifty. So till it sustains above 52,300, there is no caution that can be seen for the banking space. And I'm expecting that on the higher end, not very aggressive. 53,000 again has the maximum call writing position. So I'm expecting that 53,000 or 53,000, let's say 100 should be the immediate resilience that can be seen in the market. If it decisively surpasses the zone of 53,100, then only we can witness some strong traction coming in for banking space. And if it does, then definitely the benchmark index will also start moving on the higher end. So one should definitely try to gauge or try to look for opportunities on the buying side with 52,300 as a stop loss.
I want to talk about some of the stocks that will be in focus. This morning, government of course has hiked the windfall tax on crude. It has almost been doubled to 6,000 rupees per ton. Do you expect a knee-jerk reaction on stocks like Oil India and ONGC? I think there's been some corporate action in Oil India, because in the pre-open at least, and in the last 5 sessions, it's showing down by 30% or thereabouts. But particularly for ONGC, what kind of moves would you be expecting? Because of the last 5 sessions, it has managed to show decent traction.
See, overall, coming to ONGC, then obviously there has been a strong consolidation, but this news will definitely have some impact on short-term perspective. So once it opens on I am expecting that there will be a kind of minute gap down that can be seen in this counter. After that, there can be a decent move that can be seen in ONGC. Overall, the technical structure remains robust. It is hovering above the exponential moving averages. So if there will be any kind of dip towards 270, 265 also, that should be auguring well for this counter. But there is no very aggressive targets for ONGC. The gradual up move is expected to continue in this counter for the higher end of nearly 285, which is a very strong resistance for this counter. So until it surpasses the level of 285, better to stay sidelines from ONGC.
Oil India, of course, it's a record date for its bonus issue today, which is why it's showing such a sharp downturn on the stock. But that's not really the case. It's the record date for its bonus shares. Aside of that, want to get in your thoughts on the Adani group of stocks. There is news flow that SEBI has issued a showcause notice to Hindenberg on its report on the conglomerate, right? In terms of Adani Enterprises, the stock has cooled off, right? In the last 1 month, I can see negative returns on the stock. It has shed somewhere around 12% or 6% or thereabouts. That's Adani Ports for you. Adani Enterprises also, I think, somewhere around 12% or thereabouts lost in the last 1 month. So, would you suggest looking at Adani stocks on dips? Because, of course, over the last year or so, it has seen these group of stocks have seen a phenomenal run.
See, overall, Adani Group, as you mentioned just now, that Adani has been seen a very strong move in the last 1 year. So this should continue. Today's news, yes, that will have some kind of sentimental issue, sentimental momentum in the market, but that should not be hampering the technical setup for these counters, because these have already recouped from the lows. So I'm expecting that there will be a gradual move in the overall Adani Group. This news with Hindenburg can give some kind of positive sentiments to the retail investors and all those investors who invest in Adani Group. So overall, this is a very positive kind of an outlook for the company as of now. But overall, technical structure for major of the Adani Group remains positive. Adani Enterprise, again, as you mentioned, that it has cooled down approximately 10-12% from the highs. But from here onwards, one can definitely see a decent up move in the coming period.
There it is then, the opening bell, and we are at fresh record highs, 24,200 on the first tick. We saw that level being hit on the Nifty. Sensex as well, 79,660 is where it's at. So we are at record levels. There's been no stopping the bulls, right? Since last week, we've seen a very strong rally play out, and the Nifty has been hitting milestones after milestones. Friday was, of course, a day of breather, but that's long forgotten. And what is long forgotten, of course, is the crash that we saw on the 4th of of June, we have we've been extremely buoyant, and there is no stopping the bulls really around that 24,200 mark as we speak. Broad end of the markets also in fine fettle, moving in tandem with the markets. The Nifty mid-cap index, after hitting a fresh high yesterday, the momentum continues there. 0.3% kind of gains coming in there. Let's also see what the small cap index is doing. 0.5% uptick. So, record highs all around. Look at the Nifty Bank index. Good traction there. Although it's a little flat, but it is cruising above and above that 52,600 mark. Let's see whether we manage to reclaim that 53,000 mark in today's session or not. But taking a look at the other sectoral movers, then I want to see what the auto pack is doing. Yesterday, auto pack was buoyant given the fact that we saw automakers report their monthly sales figures, although it was a mixed bag, but autos were in fine fettle yesterday. What about the IT pack? Today, of course, it's some bit of a breather there on the auto pack, but taking a look at the IT pack, strength, 0.7%. Yesterday it was the top mover among all the sectors, 2% uptick yesterday, and once again today, among the top sectoral movers, 0.7% uptick on the Nifty IT pack. FMCG trading with positive bias, so is the energy pack, the Nifty Bank Index I already mentioned, metals flat, pharma as well flat, but all of these sectors are trading with a positive bias. Almost all the sectors in the green, the realty pack as well, exhibiting strength. 0.6% higher for that. India VIX flat, no uptick or downtick there. But in terms of individual movers, let's see what the Nifty 50 constituents are doing. ONGC, despite the steep hike in the windfall tax on crude, ONGC is the top Nifty gainer, 1.5% uptick. Eicher Motors, that had been seeing some bit of profit taking, has edged back into the green. HCL Tech, Wipro extending gains. Tech Mahindra, that was the top mover on the Nifty yesterday, extending those gains. Bharti Airtel, 0.6% higher. L&T, that was among the losers yesterday, it's back on the gainers list. On the flip side, you have Bajaj Auto, of course, reported monthly sales figures yesterday. It's the top Nifty loser right now. Sun Pharma, Bajaj Finance. I think we'll be waiting for quarterly updates from Bajaj Finance. Ahead of that, yesterday it was among the top contributors on the Nifty. Today, on the losers list. JSW Steel, Ultratech Cement. Cement stocks, of course, saw good traction in the second half of the session yesterday, but some bit of profit taking after the stellar gains that we've been witnessing on the cement pack. Adani group of stocks under pressure. Adani Enterprises, under pressure. Britannia, Dr. Reddy's, Hero Moto, some of the other losers on the Nifty. But as of now, we are cruising along that 24,200 mark. Looking at the open now, Osho, what would you recommend for our viewers in terms of stock picks?
See, from a technical point of view, there are counters which are looking very positive to me. From the fertilizer and chemical space, Aarti Industry is looking very positive. Yesterday, it has seen a very strong bullish formation from the 21-day exponential moving average. Today, it is holding on the higher levels of approximately 1% gain. So, Aarti Industry is one of the pick that one can definitely look to accumulate for short-term or positional basis. Near about same levels, 705 to 710 is the accumulation zone. 685 should be kept as the stop loss, and in the coming 1 to 2 trading session, one can definitely expect a target of nearly 740 to 745. So this is one of the technical pick. The other one is from FMCG space. HUL is looking very positive. In the last 3 trading session, it has gained strong traction and is hovering comfortably above 2500 mark. So one should definitely try to accumulate HUL for higher target of nearly 2620, and for short-term traders, it is advisable to keep a stop loss around 2430.
Okay, that's the view. Then those are the stocks to watch out for, the industries and HUL. But a quick chart check on some of the two-wheeler makers. Bajaj Auto, among the top laggards on the Nifty today. The stock has given 6% kind of returns in the last 3 months, which is quite small in comparison to the kind of rally it has seen, right, over the last 1 year or so. And aside of that, Hero Moto, numbers, the figures for June auto sales were pretty good. So between the two, today, I mean, Hero Moto also under some bit of pressure. Autos have actually been witnessing intermittent selling pressure, right? If you see the last 2 to 3 weeks. Would you advise buying on dips?
From comparatively view, Hero Moto is looking definitely better than Bajaj Auto, and with today's subdued kind of a movement, approximately 0.15, 0.20% lower, one could definitely try to accumulate Hero Moto from a positional basis. I'm expecting that 55.80, 55.70 should be seen as the accumulation zone, and on the higher end, definitely for day trader, one can definitely try to book their profits around today's high of 56.80, 5700 odd levels. But from positional basis, this counter looks very positive, and it has the potential target to reach near about 5800 odd levels.
Another stock that's in focus is CSB Bank, Catholic Syrian Bank. It has given out its first quarter update. Deposits have seen a good uptick around that 30,000 crore mark vis-a-vis 24,500 crores in the same quarter last year. Advances have also seen a good uptick, somewhere around 4,000 crore kind of an uptick on a YOY basis. The stock is reacting pretty well to it, 5% up. In fact, in the last 5 days as well, if you see the move, cumulative move, it's somewhere around 10%, and the last 1 month has seen a 13 to 14% kind of gains. Should one play this stock, with a view to trade into it? Would you advise?
See, overall, in the last 3-4 trading sessions, the time it breaches the zone of 200, the SMA near about 365, it has gained strong traction, but currently I'm expecting that it is on a breakout zone. Approximately the sloping trend line is hovering near the zone of 400, 405 odd levels. So definitely one should remain caution or could maintain a strict stop loss in this counter holding position. If not, then better to wait for a decisive breakout above 405 odd levels. If it breaches 405, then definitely there can be another 25 point of rally that can be seen. So currently it is at a crucial resistance zone. One should maintain caution or maintain a strict stop loss of nearly 380 odd levels if they have the positions.
Okay, that's the view then on CSB Bank. But quickly, we're getting your thoughts on Patanjali Foods, right? Yesterday, it was among the top Nifty 500 gainers. Today, there is news flow that the company will be acquiring the non-food business undertaking from Patanjali Ayurved for somewhere around 1100 crore rupees. The stock is, in fact, it did hit its 52-week highs today. But on the higher side, what are the levels you'll be watching out for here with a 2 to 3 month perspective?
See, overall, it has given a very drastic breakout around the zone of 1650, which was approximately 150 point of consolidation zone in the previous trading sessions. So from here onwards, definitely one can see a higher movement of approximately 150 odd points. So 1750 to 1800 is the resilience or the next potential target for Patanjali. So for the target of 1800, one can definitely try to accumulate discount.
All right, that's the view on Patanjali Foods. Hold that thought, Osho. We'll come back and discuss, queries that are being sent by our viewers and other stocks that are in focus this morning as well. But let me also bring on board, our next guest. Joining me is Amit Jain, who's the co-founder of Ashika Global Family Office Services. Amit, great to have you on the show. I don't remember the last time we spoke. We were, of course, cruising along then as well. But now, looking at the texture of the market, 24,200. We've already crossed that threshold. There was a knee-jerk reaction to the election verdict on the 4th of June. We have come off pretty well after that. It's well in the past now, 6,000 point fall on the Nifty. But here on, what are your thoughts? How should one navigate this leg of the bull run? And, how would you really navigate this leg of the rally?
Hey, good morning, Nandita. It's always good to have a show with you. If you remember my last interview with Moneycontrol on 18th of August 2023, the Nifty was hovering around 18,000 to 19,000, and I'd taken a contra bet that we are very, very bullish on Nifty. Since then, Nifty at the index level has given you 25% return in last 11 months, right? In fact, I was more bullish on Bank Nifty rather than Nifty at that moment of time. But I think in the last 3 months, we have seen that Bank Nifty has performed well, and that pocket of undervaluation from Bank Nifty has come into equilibrium level. So I believe now Nifty at 24,000 looks fairly valued to me. Still, I think there can be 1 or 2 stocks from Nifty Bank which can further lead the market up. Maybe probably HDFC Bank will continue to go up because it has come back after a very long time. It has come into a trend again. And IndusInd Bank, which are the constituent of the Bank Nifty, may still perform well and take the Nifty a little higher. But I think on the broader term, I think it looks fairly valued to me now. So I'm not as bullish as I was in August 2023. But yeah, so still there's a pocket where you can make money.
If you're as bullish as you were back in August, would you say that we would end the year on another high, perhaps 26,000? Would you be as bullish as that?
So in my interview with Money Control, I have said 25,000 for last of 2024, and we stick to our target for 25,000 Nifty by end of 31st December 2024.
All right. Okay, 25,000, very much on the cards this year itself. We're just about 800 points away from that level, any which ways. Looking at the architects of, the last bull run, defense, PSUs, you had realty, autos, phenomenal run in all these sectors. But, banks, private banks have just started catching up. Aside of banks, any pocket that you, feel that one should rotate into? Because, sector rotation is at play in this market, right? So which are the sectors that one should rotate out of, and which are the sectors they should be looking at the current juncture?
So we believe that there is some value buy opportunity in the PSUs still left out. There are a lot of PSUs which are still trading at a 1 to 1.5 of book value. And particularly in the oil sector I'm talking about, they offer a very good value for a long-term investor. One. Number two, PSU banks also look good to us. Although a year back I was bullish on every PSU bank, but now probably only 2 or 3 PSU banks we are bullish at this moment of time. We believe there is still a very high value and they'll go up. Then third pocket probably we believe is anything on an engineering side. I think on a innovative side, on engineering side, and mid-cap IT sectors. These are the 4 pockets which we feel that will do well, keeping next 1 year in mind.
Right. Before I talk about other sectors, want to get in your thoughts on the kind of promoter stake sale that we have seen thus far this year, right? It has already hit $10.5 billion. Last year, in 2023, that figure was somewhere around $12.5 billion for the entire year. What are you making of this sudden rush to pair stake? Do you think this gives out a positive signal at all? Should one be worried about the kind of promoter stake sale we've seen this year?
I think promoters in Indian stock market, if you see overall, the promoters hold almost 55 to 60% of the Indian equity market, right? Less 20% is held by 20% each is held by DI and FIIs. And I think if they are holding 50% and they are selling 1 or 2% of the stake, it hardly matters to the market. Number one. Number two, this year promoter has sold almost 85,000 crore of worth of shares. And I take it in a very positive way because that money some way is going to get invested in some form or another form. So I believe it's a positive sign. And the great thing is that market is giving you a liquidity to book your profits, which probably we have never seen 10 years back, because if anyone want to do a block deal, we hardly used to have a block deals 10 years back. But now, because of this liquidity flow, I think market is giving you a good exit point, which further increase the confidence of the FIIs in Indian market. So because the liquidity driven rally, I think it will give more lack by the FIIs going forward, because they feel the Indian market is very liquid now. And they can probably sell whenever they want to sell.
All right. Let's talk about certain pockets now. IT for one has gained very good traction in the last 1 month. There are hopes of a recovery in terms of earnings in the first quarter. Some bit of recovery, so to say, because fourth quarter turned out to be very tepid. In your view, are there signs of any kind of recovery that the IT firms could bet on in the first quarter, or do you think that it could get delayed to somewhere around third quarter or thereabouts? Because there's been no visible improvement in discretionary demand, although some of the companies have reported good deal wins, Wipro being a case in point, which of course earned a double upgrade from CLSA yesterday itself. So your thoughts on the entire IT pack? Do you think the worst in terms of revenue is behind and no further guidance cut could be expected from this space?
I think at this moment of time, we are structurally bullish on IT. I believe the earnings has already bottomed out. It may take 1 or 2 quarters more to before we start seeing a consistent growth going forward. But I think from a price point of view, I believe this sector has almost bottomed out, at least from a large cap perspective.
Also, any pecking order in the IT pack? Would you prefer mid caps or would you stick to large caps now?
I think I'll stick to mid caps because I think there are a lot of mid caps which are valuing at a very good price to book, price to earning, price to growth, whatever parameter we take in. There are a lot of mid cap which are offering great value with great potential of upside. So I'll prefer mid caps over large cap at this moment of time.
Any thoughts on the aviation space? Because, I was just reading a report yesterday on Indigo. I think it was a Kotak note where they pointed out that, load factors could get impacted because of high airfares and, the inability of really passengers to really pay that kind of airfare. So load factors could come under pressure in the near term at least, although the long term story remains intact. But any thoughts as to how really, things could pan out for some of these airline stocks going forward? Because Indigo, if you see the price movement, it has taken a pause after a good up move.
I believe Indigo as a share looks fairly valued to us. It has already given you 30-40% return in last 6 months. It's fairly valued. About the space, I think if it comes to pricing pressure, it will only impact the leisure travel, not the corporate travel. And I think most of the people travel by flight, they are more the corporate travelers. So I think it may have an impact, but not a big impact I expect because of any such move of load factor or any regulation or by any regulatory move.
And what about the multiplex space? There's a new release, Kalki, which has done fairly well at the box office thus far. But do you think a couple of releases here and there, would be enough to revive fortunes? Because, since COVID, multiplex shares, or in fact the entire sector, has been under a fair bit of pressure. Now there is no big ticket movie pipeline as well going forward. What are the next triggers that one should really, or one could really expect in terms of the entire, multiplex sector?
I think we are still continue to be cautious on this sector because OTT has given you a great competition for this sector, and this competition is going to further intensify going forward. So as an investor, I have a choice whether I want to invest in this sector or I want to prefer a PSU over a multiplex. So I'll prefer a PSU or PSU bank over a multiplex if I want to invest my money.
All right. Last question really. Where is it that, you're finding value in terms of the theme that one should really watch out for the next 1 to 2 years? You mentioned that, of course, you see some more room in PSU stocks, select PSU names. But in terms of the next big theme, do you think consumption or, players like HUL, Marico, Dabur, do you think these are some of the stocks that merit a look now?
Absolutely, yes. In fact, we covered in a monthly research magazine, which we publish every month. We give 3 recommendations. In fact, in the month of May, we given Dabur when it was close to 502. It is already 600 rupees now. But we still feel that FMCG sector is bouncing back after 2 years or 2 or 3 years of long gestation period. So it offered a great value, number one. Number two, monsoon looks good. So that will support the FMCG consumption. And number three, generally, we have seen post-election, the FMCG consumption always increase because we have a lot of informal money which gets into the economy and the rural market. And if you want to really vouch for FMCG sector, you have to vouch how rural consumption is picking up. And in the last con call of the corporate con call with the FMCG companies, we heard that this consumption is reviving. Hence, we will continue to maintain a bullish stance on FMCG sector from a 1 or 2 year perspective. But most of the stocks in this space are portfolio stocks where you can invest larger sum of amount with least volatility. So anyone who is looking for stability, FMCG looks good to us.
All right. Look at the FMCG pack for stability. With that, Amit, always a pleasure chatting with you. Thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you so much. Look forward.
Thank you. Well, with that, let's go back to Osho. Osho query time now. Quite a few queries have trickled in since the start of the shows. Want to quickly address them. Satya CK has written in and he wants to know your thoughts about GE shipping. He wants to know what are the levels one should really look at for getting into the stock with a 1 to 2 year time horizon, and what are the kind of targets one can expect. Your thoughts, when should we really look at entering this particular stock?
See, definitely looking at the recent period, this counter has gained a strong traction from the zone of near about 1000 towards 1250 odd levels now. But still it is having positive momentum, and I expect that any kind of dip towards the zone of 1170, 1180 should be the apt level to accumulate this counter on the higher end with the momentum and with the formation that it has made. Immediately 1500 is the target that one can expect from short to medium term perspective, and once it surpasses the zone of 1500, then approximately 200 to 250 points of further upside movement can be seen. But for immediate basis, the target comes around 1500 from technical point of view.
Okay, those are the targets to watch out for on the stock. Hope that answers your query. The next one is coming in from Maheshwar Bhanu, who wants to know your thoughts on a Union Bank. And rightly so, because the stock has come off quite a bit, right? In the last 1 month, we've seen a 20% kind of a down move on the stock. He wants to know a good level to add this stock. Do you think now is the time?
See, overall, this counter has seen a very drastic move, and in the last 4 to 5 trading months, it has underwent into a very strong consolidation also. But currently, also looking at the momentum that it has lost the traction, so one should definitely wait for further correction. I am expecting on the lower end, 125 to 130 should be acting as a very strong support for this counter. So any further dip towards 130 can be seen to accumulate this counter for immediate upside target of nearly 155 to 160.
Okay, that's the view. Those are the levels to watch out for on a Union Bank. Hope that answers your query. The next query is coming in from Tanisha Jain. She wants to know your thoughts on IREDA. Now, this stock, of course, has been a multi-bagger since it listed. It listed in 2023 November, but since then we've seen the stock clocking in a 2x kind of a rally. Last few days, some bit of a cool off happening. Last 1 month or so, we've seen muted gains, but no, there isn't. There isn't a lot of historical data available on this particular stock. But looking at the recent trends, what are your thoughts?
See, overall, the trend for this counter is definitely positive. It is maintaining the cycle of higher highs and taking support of 21-day and 50-day exponential moving average. So any dip towards the zone of 180, 185 should be auguring very well for this counter. And I am expecting that the time it breaches the zone of 210, then onwards we can see a decisive upside movement. But overall, I am not very much aggressive, but there will be a gradual up move in this counter from short to medium term time frame. Immediately 180 to 210 is the zone, and one should try to buy on dip and book profits around the highs.
Okay, that's the view. Last query really, this one is coming in from Alex, and he wants to know your thoughts on rights for fresh entry. Railway stocks, they did take a breather after, the stellar moves. But rights holding above that 700 level right now, do you think one should wait for some bit of more dip to come in before getting in?
See, from here onwards, I am expecting that this counter can see some strong traction. On the higher end, the immediate resistance is near about 710. The time it sustains above the 710 target, then from there onwards we can see a decisive up move for immediate target of 760 to 65 odd levels. So one should definitely try to gauge the momentum. The time it surpasses the zone of 710, one should try to accumulate for higher targets of nearly 760 from short term perspective.
All right, that's the view on rights. Expect the stock to gain some traction from here, but of course with that we've come to the end of the query segment. Osho, thanks a lot for taking our time and joining in, sharing your thoughts on so many stocks and helping address our viewer queries as well. Look forward to our next interaction.
Thank you so much.
Well, on that note, of course, we are coming to the end of the show, but before that, reminder at 10 a.m. you'll have a new listing today, a new debutant on the Lal Street, Allied Blenders. The makers of Officer's Choice Whiskey. In fact, the shares are expected to see a 20% listing pop over the issue price of 281 rupees per share. In fact, the IPO saw good subscription. It was subscribed by almost 24 times the shares on offer. Retail portion was booked 4.5 times. Non-institutional portion was booked somewhere around 32 times. But QIB portion, saw very strong demand there. 50x kind of a subscription coming in from this portion, and the company is seeking a market capitalization of 7,800 crore rupees or thereabouts post issue. So watch out for that listing. Let's see whether or not the street really raises a toast to this one or not. But looking at the market in fine fettle, in fact no, not in fine fettle, we have given up almost all of the gains and now we are trading in the red. 24,120 is where it's at. The Nifty Bank also has given up all the opening gains and now trading lower by about almost 200 points or thereabouts, and even the broader markets have kind of succumbed to some bit of profit taking. The NSE advanced decline ratio is almost 3:2, but still tilted in favor of gainers. Let's see how the day progresses. Some bit of profit taking at highs is something that is not very surprising. So let's see how things really pan out from here. But with that, it's a good buy from me. Thanks a lot for taking out time and watching the show. Of course, stay tuned to Money Control for all your other news and updates.